the Renewable Report with Mike Kirby. Today, we'll begin our series on the basic financial concepts of installing solar arrays. Now, each state has its own financial package determined by several variables, but once you understand these basic factors, you can start to apply this knowledge in your own solar exploration. The first incentive to install solar, either residentially or commercially, is a 30% federal tax credit. This tax credit also applies to most other renewable energy generators. So, if you install a $100,000 solar system on your business, you then have a $30,000 federal tax credit. If you installed and commissioned your array in 2011 and your business owed $45,000 in federal taxes, then the first $30,000 would be covered by the tax credit. If you only owed $20,000, then the amount would be covered and the remaining $10,000 would roll over into the next year. If you only owed $5,000 in federal taxes, then you may want to fire your accountant because solar probably wasn't the best investment for your business. Now, overall, in the right situation, you will already be making this 30% investment. Why not put it toward your interests instead of Uncle Sam's? Now, the second federal incentive is a 5-year accelerated depreciation. It is only available for commercial projects and generates significant tax savings over that 5 to 6 year time period. To understand this concept, we must first know the difference between expensing versus capitalizing. In very brief terms, an expense is a cost incurred such as salaries or gasoline for the company truck. These expenses are not assets and their cost reduces the profitability of a business, so it lowers the amount of money that a company can be taxed. A capital expense is generally the purchase of an asset, such as a company truck or a solar array. These purchases have a benefit term of several years, and sometimes many decades, like a solar system. Now, these purchases do not reduce the taxable profit by their full amount in the year purchase. In these cases, the IRS mandates that the tax benefit is spread over the life of the asset. However, a solar array and other renewable projects are allowed to depreciate or expense these costs in 5 years rather than their 25-year lifespan to encourage investment through short-term tax savings. I've seen this equate to about a 29% tax savings over the 5-year term, although it can be slightly lower depending on your tax rate and other factors. You should always consult your accountant when analyzing the real benefit of depreciation on your business. Now combined, these two prices can significantly decrease the amount of money coming out of your pocket in April and should be major factors to consider when looking at any renewable project. Whether you run a small restaurant at the beach or a major warehousing operation in New Jersey. This concludes part 1 of solar financing. Next week we'll look at state grants. If you have any questions about this or other topics, email them to renewablereport@gmail.com or ask me on Twitter at mpkirby4. Thanks for watching and enjoy the week.